Trump found 113 pages of stock trades this month. Apple, Nvidia, Meta, Oracle, Amazon, hundreds of companies. One name is not there once. If you hold Tesla, that company is yours. He bought Dell stock in February 2026, then stood at the White House in May and told the country to go out and buy a Dell. The stock hits its all-time high the same day. Every president since Lyndon Johnson made the same choice when they moved into the White House. They put their personal investments into a blind trust. Think of a blind trust like handing your car keys to a stranger and asking them to park it. You do not get to watch where they park it. You do not get to give instructions. You hand over control because you have to make decisions about traffic laws and you should not own a parking lot while you do. Every president understood this. Jimmy Carter liquidated his peanut farm when he was elected in 1976. He did not want to make a single decision about farm subsidies while owning farmland. Barack Obama held treasury notes and index funds. No individual companies, no individual stocks he could help or hurt. Joe Biden used a properly structured blind trust during his term. But Trump's assets sit in a trust controlled by his own children. That is not a blind trust. That is a family business with a legal structure around it. And in Q1 2026, it was very active. 3,642 securities transactions between January and late March 2026. That is roughly 58 trades for every single US trading day in the quarter. The total estimated value sits somewhere between 220 million and 750 million. The filing uses broad ranges, not exact figures. A single transaction might show as a $1 million to $5 million. The exact number is not public. Now, there is a specific exemption written into the law. The president is the one person in the entire federal government who does not have to follow the conflict of interest rules that govern everyone else. A cabinet secretary, a senator, a mid-level agency director. None of them can hold stocks in a company they regulate. The president can. There is also a law called the Stock Act. It requires senior government officials to disclose their stock trades within 30 to 45 days. The White House described this filing as full compliance with that law. That is accurate. Some of you are already forming the question, is any of this illegal? That is the right question. The honest answer is no, not under current law. What I cannot tell you is whether the timing is a coincidence. One more detail. On the cover page of the 113-page filing, there is a handwritten notation. It reads, "Filer paid late fees." The most powerful person in the world filed his stock disclosures late. Now, Elon Musk ran the Department of Government Efficiency from inside the White House. He had a government security clearance. He attended cabinet meetings. He had an office in the West Wing. His company does not appear in a single line of this filing. Not one share of Tesla in 3,642 trades across 113 pages. If you hold Tesla, that is a data point. But the absence of Tesla only makes sense once you see the pattern around everything else. In the 5 trading sessions before February 28, 2026, the filing shows 95 sales against 69 purchases. More selling than buying, right before a war started. Hold that, we are coming back to it. The clearest example of how this filing works is not the missing name. It is the one that got the endorsement. February 10, 2026. Trump's trust purchased between $1 million and $5 million worth of Dell Technologies stock. Now picture what happened next. May 8, 2026. Trump stood at the Mother's Day event at the White House. He thanked the Dell family by name. Then he looked at the room and said, go out and buy a Dell. Dell Technologies stock hit an all-time high of $263.99 that day, up 14.6% in a single session. He had owned the stock for 88 days before that moment. And there's a layer underneath this. In December 2025, the Dell family pledged $6.25 billion to fund Trump accounts. Trump accounts is the administration's signature retirement savings program. $6.25 billion. That is more than the entire annual government budget of some small nations committed to a sitting president's program by one family. Now look at the same filing again. Robinhood appears as a purchased stock. Robinhood serves as the initial trustee for Trump accounts. So the family funding the program makes the largest donation in its history. The company managing the program's money gets purchased in the trust. Then the president publicly tells the country to buy the stock. I want to be clear. No authority has described any of this as illegal. The White House has not said the endorsement was connected to the donation. I am not telling you what to conclude. I'm showing you the sequence of dates and letting you read it. But Elon Musk's company did not get that sequence. His company did not get that endorsement. The man who spent the most political capital backing this presidency, who put hundreds of millions into the campaign, who physically moved into a government office to restructure federal spending. His company is the one with zero presence in this portfolio. They voted with their own money before you had the chance to vote with yours. If this breakdown is still so, hit like and subscribe. I go 3 layers deep every week. The Dell story is one example. It is not the whole picture, because this pattern runs through almost every major position in this filing. Every major stock purchase in this filing has a policy story attached to it. Oracle. The trust purchased an estimated $2.2 million to $10.6 million of Oracle stock in Q1 2026. At the same time, the Trump administration was working on the deal that decided whether TikTok could keep running in America. Oracle is the company that hosts TikTok's US data. A good outcome for TikTok is a direct financial win for Oracle. The buying and the deal making happened at the same time. Crypto. The filing shows purchase in Coinbase, Mara Holdings, and Strategy. Mara is a Bitcoin mining company. Strategy is the largest corporate holder of Bitcoin in the world. These are stocks that move almost entirely with crypto policy. Trump signed executive orders making crypto a federal priority. He created a federal Bitcoin reserve through executive action. His administration pushed the Clarity Act through Congress. The Clarity Act is the crypto industry's wish list for regulation. The purchases and the policies run in exactly the same direction. Intel. The filing shows a series of Intel purchases beginning in early March 2026. In late 2025, the US government made a significant equity stake decision in Intel. The government became an Intel shareholder. Then the trust started buying Intel. Think about what this map looks like when you step back. Dell, Oracle, Crypto, Intel. In each case, the policy created the tailwind. In each case, the portfolio was already positioned when the tailwind became public. I want to hear from you. When you look at that list, Apple, Nvidia, Meta, Oracle, crypto companies, defense contractors, and then you see Tesla is completely missing. What is the first thing that goes through your head? Tell me in the comments, because the answer to that question might tell you more than this filing does. Elon Musk spent more time inside this administration than any CEO on that list. He did not just support it from the outside, he ran a division of it. And his company is the one technology company with zero presence across 113 pages. Earlier in 2026, Elon publicly criticized Trump's spending bill in Congress. Trump hit back, and their very public friendship ended. 2 Trump analysts had already bought Tesla before that happened. The people around the president are still in it. the fouling for the man at the top is not. His method runs through every position in this fouling, except one. February 28, 2026. That is the weekend Operation Epic Fury began. The United States and Israel launched a military operation against Iran. Markets opened the following Monday to uncertainty. Earlier, I flagged a pattern in the 5 sessions before February 28. Here is what it means. 95 sales against 69 purchases. The portfolio was net selling. More money going out than coming in. Right before the weekend, the war started. Then March happened. In January and February combined, the trust logged 859 total transactions, a roughly balanced split between buying and selling. In March alone, it logged 1,319 transactions, 983 purchases against 336 sales. There is more activity than January and February combined, and the buy-to-sell ratio went from balanced to almost 3 to 1. The S&P 500 fell 7.8% from its pre-war level of 6,878. The market bottomed around March 30th, 2026. The trust was buying on the way down. I went back and looked at how markets have behaved in every major military conflict since World War II. RBC Wealth Management studied 20 of them. In those 20 cases, the S&P 500 fell an average of 6% from the initial shock. In 19 of those 20 cases, it returned to its pre-conflict level in average of 28 days. The Ukraine war in 2022 was the exception. That one dragged longer because the conflict hit global energy and food supply chains in ways the Iran war did not. The Iran war followed the historical pattern almost exactly. 7.8% decline. Full recovery by April 13, 2026, 44 days after the low. Some of you are already thinking, that is just buying the dip. Anyone can do that. That is fair. The strategy is not unusual. What is worth looking at is the scale and who was doing it. But the fouling does not say who placed those much trades. It does not say whether the decisions was Trump, his children, or a broker. What the form does say is that 983 purchase decisions happened in 1 month, while retail investors across the country were watching their accounts fall. Tesla was falling during that period too. The S&P 500 index fund that appears in this fouling was being bought during the dip. Tesla was not. The one company whose CEO had just left the government, the one company that would have been the most politically charged position to hold, was not bought on the way down. 3 things I'm watching from here. 1. The next fouling, which covers April through June 2026. Watch specifically whether Tesla appears in it for the first time and which positions from this fouling has been exited. 2. Oracle and TikTok. The deal is not finalized. If the terms shift, watch how the Oracle position in the next disclosure responds. 3. The Trump Accounts Program. $6.25 billion of Dell family money sits in that structure. Robinhood is the trustee and also a purchased stock in this fouling. How that program grows and what happens to those positions is worth tracking. Trump filed 113 pages of stock ideas this month. Apple, Nvidia, Meta, Oracle, Dell bought 88 days before the endorsement. Crypto bought before the executive orders. Intel bought after the government became a shareholder. 3,642 decisions across 113 pages. And in none of them did someone decide to buy a single share of Tesla. The trades in this fouling were made between January and March. The fouling landed in May. That gap exists every single time. What are you watching for before the next one arrives? If this breakdown is useful, hit like and subscribe. I go 3 layers deep every week.